You asked for him, so we brought him back. He's famed investment guru Jim Rogers, and I'm putting him on the spot. Jim, thanks so much for being with me on Kitco News, and I'm happy I get to speak to you. Following Ben Bernanke's statement earlier this morning, the Fed chairman basically said that yes, the U.S. economy remains sluggish, but he didn't offer any solid clues that the central bank would embark on a new round of quantitative easing. But if we read between the lines there, he was also saying if the central bank has to act, it is ready and it will. What are your thoughts on his statement?
Well, Mr. Bernanke is exactly right. If he has to, he will. He will probably anyway because he doesn't know anything else to do. As the world economy gets into trouble next year, the year after, Mr. Bernanke is going to print more money. You know, Mr. Bernanke has spent his whole intellectual career studying the printing of money, and now we've given him the printing presses, and so he's going to print. I wouldn't pay much attention to the man. He only knows one thing, and that's what he's going to do.
So, Jim, let me ask you this. It just seems that in today's market, things really seem pre-signaled as compared to in the 80s where the Fed rarely signaled the change. Do you think that even though Bernanke has said he won't stimulate the economy further right now, he could possibly surprise the market?
Well, it's hard to surprise the market because the market's smarter than Bernanke. The market will see that things are going badly in the economy, and the market will figure out that Mr. Bernanke, since he doesn't know anything else to do, will print more money. It's just a question of how much lead time the market has. Now, many of us will be surprised because we won't know the day he's going to announce it. But he will announce it eventually, but that's all they know to do. Daniela, if the world economy gets better, they're not going to do anything, but we're going to have more inflation. If the world economy doesn't get better, they're going to print more money because that's all they know to do. So just watch the economy, watch the market, and you'll see what's going to happen, and then you'll know what Mr. Bernanke is going to do. Mr. Bernanke is not a very smart man. He just follows the market.
Jim, many analysts I've spoken to have said that the U.S. dollar is due for a major rally. Do you agree?
Well, I own the U.S. dollar. I don't have much confidence in the U.S. dollar, but I own it because the world doesn't know what else to do. It's a little bit like Bernanke. Bernanke is going to print, and when there's more difficulties come to the world, many people will flee to the U.S. dollar. It's the wrong thing to do, but they don't know anything else to do, so that's what they'll do. I own the U.S. dollar as a result. I don't have any confidence in the U.S. dollar, but when problems start, whether it's Europe, Japan, wherever it is, people will flee to the dollar.
Is the U.S. dollar the most attractive option right now, Jim?
No, it's not the most attractive option at all, but it's all that people know. And so they will go there. I mean, there are other things. I'd rather buy the Swiss franc or even the Japanese yen or the Swedish krona. There are other things which are better currencies, but people don't think about the Swedish krona. They don't think about some of these other currencies, so they will flee to the dollar. And now, eventually, as all paper money becomes more and more suspect, they'll put their money. We'll all have to put our money into real assets. We cannot all put our money into Singapore dollars or Canadian dollars or some of the sounder currencies in the world. But they're not big enough for all of us to put our money there. So they will then put their money in U.S. dollars.
So is one of the reasons you're so bullish on gold is due to your lack of confidence in the U.S. dollar?
Well, I own gold. Yes, I own all real assets. I own all commodities. I'm not sure I would buy gold right now, but I own gold, and if gold goes down, I plan to buy more gold. But I own all commodities. I think I'll make more in agricultural commodities percentage-wise than I will in gold, but I own it, and I'm not selling it, and will buy more.
So a lot of viewers write in, Jim, and tell me that they're surprised by how quiet the market is this summer, but is it not normal that the summer just kind of winds down? And last year we really saw a different occurrence in the gold market. It was one of those rare summers where we actually saw a lot of activity. Do you think this is just normal?
Well, gold has been up 11 years in a row, Danielle. It is very, very strange. I don't know any asset that's been up 11 years in a row without a down year. Maybe there is one, I just don't know it. So gold is having its correction. It's a long overdue. I mean, it's been going on for what now? 10 months, I guess it is, more or less. This is the way markets normally work. things normally don't go up 11 years in a row without a down year. And, we haven't had we've only had one substantial correction in the gold market since the bull market started. So it doesn't surprise me at all that the consolidation might go on for a while. We might even have a down year in 2012. I know the gold bulls would think that's heresy, but it's normal.
Jim, what's weighing on the correction right now?
More sellers than buyers. There people made a lot of money. Gold went up a whole lot. There's some things going on in the world. The Indians, for instance, there are people in India who would like to eliminate gold imports. They say it's bad for the economy. It's bad for the balance of trade. I mean, there are lots of things going on that could cause a bigger correction in gold. I mean, if a couple of countries collapse, if country X goes bankrupt and surprises us all, that could make everything go down for a while, including gold. But you better buy. If it goes down, you better buy it because they'll be printing money as soon as they can.
Jim, what are your thoughts on silver?
Well, I own silver too. Silver on a historic basis is cheaper than gold, so I'd rather buy silver than gold today. I'm not buying either. I repeat, I'm not buying either because it's the same thing. If gold continues its consolidation, if it goes down another 20 or 30%, silver will go down too. But if and when I buy, and if and when silver is still cheaper than gold, I suspect I'll buy more silver than I will gold.
Right, I guess a lot of people were surprised, Jim, because last summer with the crisis in Greece, it really helped gold. This summer we saw interest rates cut to a record low in Europe, and it didn't do anything to really stimulate the gold market.
Well, that's because a lot of people have a lot of problems and they have to liquidate. Many people just have to sell. There are problems in many countries, such as India. The Indians aren't buying like they used to. Even the Chinese aren't buying like they conceivably were, the same pace they were before. Many people have problems. Some of the hedge funds that are big-time owners of gold have problems. So many people have problems, and when they have problems, they got to sell something.
Jim, what are your thoughts on Europe? Will it survive? Will the euro survive?
It's not going to sink into the sea. It will survive. The Acropolis will still be there in 100 years. Will some countries go bankrupt? Yes. Some are bankrupt now, and reality will sink in, and some of these countries will have to declare bankruptcy or declare bankruptcy in there's more than one way to declare bankruptcy. So they will certainly go bankrupt. One or two may even pull out of the euro, which then the euro will be very difficult to determine whether the euro is going to survive or not. I don't have a position in the euro. I'm not long or short the euro as we speak, but I would suspect, some politician is going to run on a platform of, I'll save us by getting out of the euro, and he will win, and he'll pull out. And then another politician in another country will say, I can do that too. So you probably have 3 or 4 countries pull out. Now, it's not good for the country that pulls out. It's not good for the euro. It's not good for Europe. It's not good for the world. But politicians don't really care much about any of us. They just care about winning elections. So as much as I don't like saying it, and as much as I would like to see something compete with the U.S. dollar, and the euro would be the perfect thing to compete with the U.S. dollar, I just am afraid it's not going to survive as we know it.
Jim, if you had to pick, which country would you say would declare bankruptcy first?
Oh, I don't know. Probably Greece. I mean, that's a conventional answer, so I'm sure it's wrong. There are plenty that could. We have already had, people like Iceland and Latvia have declared bankruptcy, not de jure, but de facto. So we've already had 2 or 3 in Europe. I don't know which the next one will be.
All right, let's get your thoughts on China, Jim. Big news of the week was that, yes, growth is slowing over there. But I know long-term you expect things to pick up there. Well,
China's been trying to cool its economy off for 3 years. I'm stunned at how many people don't read Kitco or just read the newspaper, because for 3 years the Chinese have been doing their best to cool things off. Now they're cooling off by design. And in fact, they're even trying to loosen up a bit now. We're all going to have problems in the next 2 or 3 years. If Europe and America are the largest economies in the world, if they have problems, everybody has problems. Europe and America are 10 times the size of China. So anyone who thinks China is going to save us all should do a little homework. China's done a great job in the past 30 years, but they cannot save us.
Do you like gold mining stocks, Jim?
No, I prefer to buy the real stuff. The studies show that you'll make more buying the real commodities rather than mining other commodity stocks, unless you're a great stock picker.
So you like physical, Jim?
I like the physical metal. I mean, I do have an index which buys, hopefully, top quality commodity companies for people who want to buy commodity stocks. But for the most part, I buy commodities, the real things themselves, rather than the miners. And whether the gold mining management in the world is great or hopeless, I don't have a clue, because I only know one.
All right, Jim, final thoughts for investors.
Be very careful, because we're going to be the world's in precarious shape, and they're going to have some very strange occurrences in the markets in the next 2 or 3 years. There's going to be a lot more upheaval, a lot more bankruptcies, a lot more confusion. So be very careful.
Thanks so much, Jim.
Thank you, Daniela.
And thanks for watching this edition of On the Spot. It's my last one before I leave for vacation, but I'll be leaving you in good hands with my colleague Alex Letourneau, who will be filling in for me. In the meantime, you can email the entire news staff at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.